Hey, what's going on everyone? Tom here, the consultant, and welcome to Trading Drill Fridays. So today we're going to be taking a look at a trading exercise known as Flip a Coin. You can find this trading drill at pricesquawk.com. It's right off their main page, and they should have a button at the top on the menu that says Trading Drills. Go ahead and click that. And you should be able to find trading exercise number 2 fairly easy. If you can't, check the description. I'll leave a link down there to directly to this exercise. So I've already got a couple of things set up here. I'll go over that in a minute. Now the article itself is only about 5 minutes. It's about a 5-minute read. I would encourage you to read all of it before just going off of what I say. You'll have a much better in-depth idea over what it is that you're doing. So I would encourage you to take the time to read that. But basically what we're going to be having up here is I'll just go through this article here. Let's see. So you are allowed to have the DOM with the volume profile. You'll see why this is so large, why I have it so expanded out so much. But basically, you want to have a timer. I have a timer up here. This is if you have Windows, you can actually just hit the Windows key, type in timer. There's a built-in app for it. I just made one for 10 minutes. And then for a flip a coin, you can either use a real coin, penny, dime, nickel, quarter, whatever it is that you want to. Flip a dog if you want. Heads or tails, get it? Yeah, okay. But here you can just go to Google, type in heads or tails, flipping, heads. I think that is literally like the 3rd time I've gotten heads on here, so I don't know what Google's doing. So you flip a coin and you start the timer for 10 minutes. Now if you can see up here on my notepad, if it lands on heads, you have 10 minutes to take a long trade. If it lands on tails, you have 10 minutes to take a short trade. Now, the thing is you take a trade, you have 10 minutes to execute that trade. So you can take 9 minutes to execute the trade, but we'll get into on what that means later on down the page. Basically, you have 10 minutes to execute the trade, and once the trade is closed, stop the timer, reset the timer, flip a coin, and then you basically start all over again. Okay. And you do this on and on and on and on. I would probably say, maybe do this again over, the 35 to 45 minutes of deliberate practice. I think that would be a good exercise to put on your schedule. So, let's see, if the timer expires, you must. So this is important. If you start the timer and you're supposed to take a long trade and you can't find a trade to take, you have to either hit or lift, basically just buy or sell at that moment. So use the order flow logic for finding best fills within your time constraints, managing your exit. Okay. This is also important. We'll get to this part here in a second. Do not use the shape of the volume profile in this exercise to blindly take trades. So, start the timer once again once you've exited the position and flip the coin. Mental stop loss of 3 to 5 ticks depending on your market. Now, I've not done this trade too much with the MES or the ES, the mini. So I did make a actually no, I didn't. I did right here. I'm so disorganized today. Alright, so I did make a strategy in Jigsaw, the day trader platform, linked down in the description below. created a new one. I just called it Flip a Coin Drill. I'm only using one contract. Honestly, the price doesn't really matter. You should be able to enter a position, and the price should automatically show you where your break even or your scratch position is. So I put 5 ticks. We're gonna see how that goes. No target from there, because I plan on going with my normal strategy of just kind of, you know, once it's unprofitable, you know, in profit, I start, you know, manipulating my stop loss. I think this is a little bit closer than what I'm used to trading with, so we're gonna try it. You can go ahead and copy this as well. So I have it down here in my my tool. Let's see what else we got. Once position is closed, flip it. So mental, it says mental stop loss. I'm just gonna use a stop loss in general. Once you've executed your trade, start the timer again. Okay, regardless of you know, the outcome of your previous trade. Okay, that's also a mental piece. I believe I have the profit turned off on this, so I can't see it, but we'll see. All right, so the flip a coin exercise points. This is where the profile starts to come in. So observe how the order flow behaves around steps in the profile. Okay, so this is a big part of the exercise itself. Okay, so you're going to be taking note of any significant gaps in profile thickness between consecutive prices. You'll see that here in a second. Also notice if there's any difference in order flow where the profile is thick versus thin. And of course, this is going to depend on what market you're trading. Let me make this a little bit bigger here. Okay, so in this particular market, 50 to 167 contracts traded at this price, and at this particular time, is considered thin. You know, 10,700 is considered thick. But the step in the profile is something that we're going to be trying to take a look at, and trying to make observations in what order flow is going to be doing. And I'll show you how I'm going to do this. Excuse me. So right in here, so this is the step in the profile between these two prices. You can see that the lower price is about, well, the upper price, the difference between the two is about 2.5 times at least. So my consensus on this is whether or not, you know, we've got something like this. Like, so, you know, between 901.50 and 901.25, you got about double here. So what happens when price rolls up here and then drops off? Are we going to expect to take a long and see it continually rolling and filling this gap in here? That's kind of my consensus of it, but it also could be, you know, could fall in, roll up to, you know, 2 or 3 ticks, and then get sucked up right back in it. So that is where order flow is going to come into play a lot. So you're going to be either trying to look for absorption or a big pump up, and then the liquidity vacuum pulling it right back down. Okay, so that's kind of what I'm going to be looking for with this. Important rule here: do not exit a position simply so you can start the timer again. That's pretty important. It's considered cheating. We don't do that. We all know there's no cheating in trading. Okay. The only cheating that there really is really is trading. Don't do that either. That'll get you in trouble. See if the market moves immediately against you due to an unfavorable or difficult entry. Focus your attention instead on trying to scratch or break even. Okay. Do not allow a favorable position to turn into a loss. Okay, so this is kind of what I've been trying to work on as well. If you've seen some of my other market replay videos, you'll notice that I manipulate my stop loss almost immediately, and that's for a very good reason, and it is because if at all costs I want to break even or at least cover the price of my round trip contracts. Okay, So something to keep in mind. Let's see, you should rarely be in a position for 20 minutes. Well, I'm not really going to worry about that. I have a hard time with not being in a position for more than a minute. So, yeah, so this can be a difficult exercise due to the pressure of the timer. I've not ever worked with a timer before, so forcing you to continually judge the markets and form a bias based on the flip, okay? So once the trade is over, since the clock is still ticking, you have to shift 100% of your focus to the next trade. So that kind of goes back to, you know, not really worrying about the outcome of your previous trade. Okay, the randomness factor, going short based on a coin flip will rewire your brain so you are not fixated on whether money is to be made only buying or selling. That's also really important because I think throughout the day we do try to form a bias by looking at a chart, which is why I'm trying my hardest to get away from using a chart and really just kind of looking at order flow and the market profile for the session. So I think this is something to kind of keep in mind, you know, while you're doing this. Okay. So the review I think is actually kind of interesting. So after everything's done, you've ended your trading exercise. So I guess you should go through this and kind of answer some of these questions. There's really, I guess, two main points here. Are you consistently placing trades immediately after you exited your previous position? I think I'm going to have trouble with that myself, because if you've seen my other trades, I tend to kind of be really kind of on the go. So it's a sign of over trading. You have 10-minute window. If this drill goes really good, I may actually try and implement this in my normal day trading. You have 10 minutes. You can only make one trade. I might actually try that because that's my patience is like none. So if you might have an issue with over trading, complete exercise 1. You can go back. That exercise 1, that's basically naked trading. There's a little bit more to that, but that's basically what I trade on anyway. Let's see. You only have So this is actually really good. So you only have 3 trades up your sleeve in the morning session. Focus intensely on the order flow and use your bullets wisely. So if you only have 3 trades, you're going to take a little bit more time throughout the day. It's going to cause you and your brain to kind of step back a bit and really pay attention to what you're doing. So that's something that's really I think that's a good key takeaway, and that's something that I can definitely work on myself. So I'll be taking a look at that. There was something else in here. If you think you might be taking trades for a thrill instead of for a reasonable order flow reasons in this exercise, ask yourself before clicking the mouse, is this a logical trade or am I just bored? That's a good point. Is it probable that a better opportunity will present itself within the next 10-minute window? So many questions to think about. So if you're consistently entering at market towards the end of the 10-minute window, your 1-minute chart reviews should help you reveal if you are simply not firing when the opportunity did present itself. Now, if you're a scalper like I am, you would know that there's a ton of opportunities where we can take part in liquidity vacuums and, you know, really just kind of prices running up and then fading, you know, that long or fading that short. And those are hard to do because you literally have to be on your toes, ready to, you know, enter the market right then and there. And a lot of times you have to do them not via limit order, but you have to do them at market, pretty much. So it's something to take a look at. You know, if you're waiting to the end of the 10 minutes to execute your trade, you may kind of be worrying about whether or not you're going to be in a loss rather than the you know, actually working on the exercise itself. So you know, we only learn by actually doing, not by not doing, right? So how you manage the trade and the location of your entry and exit during this trading drill will have more impact on your probability or profitability than whether you are buying or selling. So you know, I guess the overall outcome of this, especially without using a chart, is to kind of unwind your brain a little bit, or rewire your brain so you're not fixated on whether or not you should only be buying or you should only be looking for sells. So, all right, I'm gonna see about doing a couple of these. I'm pretty positive I'm not gonna take the entire 10 minutes per trade. So we're gonna see where we go with this. Not really concerned about being profitable, but we're gonna look at the market here. Wow. Okay, this is all right. So a little bit about this chart. This is actually this is live market data right now on the October 28th, 2022 at 2:38 p.m. Eastern Standard Time. So the ES is still open for the week. We got about an hour and a half, about an hour and 20 minutes. Looks like we're at the high of the day, so wish me luck. I think Google's broken. That is literally, I think I flipped the heads on this thing probably 5 times, and it's given me heads 5 times. All right, so here we're looking at longs. We're gonna look at the market profile, like it said. We're gonna kind of look at steps. First and foremost, what I see here is double. I see double, 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 and actually I would see a top. Yeah, see, we've got quite a bit here to fill, and I've got to have a long position. So here's what I'm gonna do. I'm gonna put one here. So here's my thinking. Either one, we're gonna land here, and this is gonna act as our support, or price is gonna roll up and then roll back down. So I kind of think of this as like a little ball, like, you know, like say, you know, there's a ball here, and it just kind of rolls, and it kind of gets stuck, and if something gives it a little, just a nudge, a little bit of a nudge, it's gonna roll right here, and then it's just gonna kind of jiggle right in here, just jiggle, right? That's gonna be like that zigzag pattern that's talked about in the article, also known as getting whipsawed back and forth. But if you notice, here we've got, you know, if you nudge that ball just a little bit, you may get stuck here, but it's going to take a lot more effort to go right back up. Yeah, I don't. That's just kind of the way I'm thinking of it in terms of you know, profile. But I also do know that with volume profile, there's one of the key points to volume profile is big runs like this. So like point of control, price will typically eventually roll back to where all of the most volume is, or I guess using gravity terms, you know, it'll gravitate towards, you know, the weight of all the volume will pull it back. So we got 7 minutes, so ooh, actually, you know what? I'm going to buying tops. So we got I'm gonna buy in here. I'm gonna see if maybe that was some absorption. Damn it, I'm used to looking at the tape over here, and I don't have that. And basically, if one of these gets filled, I'm gonna take these other 2 off. So come on, 6 minutes. Okay. All right. Okay, so that's the right one. Let's see. 140, so we're moving up. I'm gonna move this up. Got 130, 132. Yeah, see, look, I think the market's gotten a little bit thicker since this morning. This morning was running around, about 700 on both sides, resting. So it's 1, 2, 3, 4. I think it's about 10 here. About 10 ticks of resting orders. That's at least normally what I'm used to seeing. It's default for Jigsaw. Yeah, so we got some orders coming. We got some bids coming in here. 264. I'm gonna move that up because one of my thoughts is if price pulls back into your red zone, see right there. I'm gonna go ahead and put that in. So we're at scratch, and move this up to. So now we've got 250 in our pocket, $1.25. So we are literally break even with contracts. So now we're up to 50. Let's see, what side are we gonna absorb? What time was it? So we're about almost 15 minutes before, 3 o'clock power hour. I think we're gonna come back here a little bit. I'm gonna move this up. Trying to give it a little bit of room to breathe, but this is really I'm about giving it about five ticks. ES is one to kind of tick up 3 or 4, go up about 3 or 4 ticks, and then drop, and then come right back down. Go up 3 or 4 ticks, come right back down. So we're gonna see how this goes. Move that up. Man, this is going to come into a good trade. Wasn't expecting this one. And 116, 908. Move that up. Alright, there we go. So we were in profit with that one. Okay, so it's a good one. So let's go ahead. I'm going to stop that. I'm going to restart the timer. And we're going to do one more. Tails. Yeah. Alright, so I should probably start this. So for tails, so we're going to find a short position at the high of the day. I know I should be kind of unbiased about this, but again, it's kind of the same thing here. It's this, it's this little step. We've also got a giant step here. So I'm gonna go short, see if we can fall off here, and I'm assuming this is definitely gonna be our wall if we get filled. Then again, it's not. Yeah, right there. 25. 4. So the ES likes to tick up and then tick right back down. We gotta look for a short. So this is where I'm already biased. will say one thing is one thing I've been learning about the volume profile is not to really buy in the middle of one of these, mainly because you'll sit here and you'll roll around the volume here, the peaks and the troughs. So you know, either look at trying to get in on the outsides, you know, getting in here, and then fading it back up, or getting down here and going short, or getting here and going long. So we might have something coming up here, maybe 25 minutes. Let's see. Nope, nothing yet. Nothing that looks enticing. Just gotta remember, I'm not necessarily scalping here, so prices come back a bit, so we're in the middle here. We're probably going to roll back and forth a little bit. 6 minutes. I don't see any real reason to short up here at the top. Yeah, I don't like the short tops, and I don't like the long bottoms, just because of, you know, the traditional ideal of a top or a bottom, or support and resistance. I mean, the market's going to do what it wants to do, regardless of how you feel. So yeah, see, we're just rolling back in here, back and forth. Part of me just wants to move the price, move this order up, but I know it's my itchy trigger finger wanting to do that, because I know the moment I do, it's gonna roll right back up in here. Another part of me wants to put it right here, but then again, that goes against my rule of buying in the middle of the profile, of the high profile parts. We don't do that. It's the same reason why we don't short the POC, the point of control, or we don't long the point of control. It's information. Ooh, nice. You see that? That was look like a little bit of rejection. A little bit, just a little bit. The high, so 10 minutes still power hour. We'll be in our trade before that. This is probably not the ideal situation to be looking for shorts. Something coming here. rejection, not rejections, not rejections, pull back. Need to stop saying that because rejection kind of just more puts me back in the mental state of support and resistance. There's a little bit of absorption, but ES likes to do this, walk up a bit, and then pull right back in the opposite direction, like this. See? Look at that. What did I tell you? And if it ticks up, it'll drop right back. Alright, so we got filled. We're thinking we want to roll back down here. That's at least what I'm looking for. Though, with this being a short stop, this trade might not last that long. So, 210, 50. But the goal here also is, yeah, see, it's not. But we also moved our one tick down, so we protected a little bit more of a profit than we would have lost with taking that full loss. So I'm gonna stop the timer here. I'm not gonna do any more. Obviously, I mean, the idea is to do this for about the 35 to 45 minutes of deliberate practice. Somewhere in your schedule throughout the day. But yeah, this is to really kind of get you looking at the profile in, on the order flow. Okay, being a little bit more deliberate with your entries, and taking your time a little bit more. So that's all I got for you guys today. I hope you enjoyed this. Yeah, I mean, I'm gonna plan on doing these every Friday, so this is gonna be Trading Drill Fridays, and yeah, other than that, that's all I got. Check out the links down in the description below, and there's some stuff down there for the tools that I use. I don't promote any tools that I don't actually use or I'm not actually subscribed to. So Jigsaw Day Trader, Price Squawk, stuff like that is down there below. I use Quantower for Blue FX and crypto trading on Binance as well. And yeah, there's a bunch of other stuff down there, guys. Check them out. And until then, I will see you guys in the next one. Later.